So everything happened much more quickly. And not only that, they did much more than they did before. So, the way I look at it very generally is the next crisis, because the markets aren't addicted to easy money, they're addicted to ever easier money.
Welcome to the Gold Exchange Podcast, where we untangle market and policy complexity using timeless economic principles. For show notes and archives, go to goldexchangepodcast.com. Now, on to today's episode.
Hello, everyone, and welcome to the Gold Exchange Podcast. I'm your host, Dixon Buchanan, and I'm joined, as always, by the founder and CEO of Monetary Metals, Keith Weiner. We're excited to welcome to our show today, Brien Lundin. Brien has over 40 years of experience in investment markets, and he currently serves as the CEO and president of Jefferson Financial. Brien produces the Gold Newsletter, a publication that goes all the way back to 1971. Again, note that date, where he covers resource stocks, small cap companies, as well as macroeconomic and geopolitical issues. He's also the host of the annual New Orleans Investment Conference, one of the oldest and most respected events of its kind. Over the years, the conference has been home to an incredible roster of speakers covering investments, economics, geopolitics, and much more. And when I say incredible roster of speakers, that is no exaggeration. I had this, vague idea in my mind that, the New Orleans conference, it's had some pretty famous people speak there. But I actually went and looked up the list of historical speakers, and it is truly impressive. As tempted as I am to rattle off a few names, I'm not going to do that. I'm not going to steal your thunder, Brien. I'm going to let you give us the full story and drop those names for us. It's not just an A list, it's an A+ list of people, and it's no wonder the conference enjoys such a good reputation. That's, of course, one of the reasons why Monetary Metals will be making its first appearance at the conference this October, which we're all very excited about. So suffice to say, Brien, it's a privilege to have you. Welcome to the show.
Thank you so much, Dixon. I really appreciate the opportunity. I will correct you. I haven't been in the business 40 years. It's only 37, and I'm clinging to that. That was probably marketing copy in my bio that said something like spanning 4 decades in the business. But it's only been 37. But the bottom line is I've been around a while, and we've been around a while.
That's great. I may have been rounding up a little there, so apologies for that. But yeah, as I said, we'd love to hear in the show today. We'd love to discuss the origins of the conference, as well as have you give our listeners a taste of what they could expect if they were to attend the conference this year. But to kick us off, I'd love for you to start out. If you could just give us a little bit of background, specifically, how was it that you ended up where you are today? How did you find yourself in the gold industry? What was it that led you there?
Yeah, I answered an ad for a junior copywriter for Jim Blanchard's old coin and bullion company back in 1985. But Jim started the conference, started everything about 14 years previous. When he heard on the radio that Nixon was closing the gold window on August 15th, 1971, he knew that it was going to usher in a period of inflation, dollar depreciation, really everything that happened in the 70s. And at the time, it was illegal to own gold. It was like, contraband like heroin or plutonium or anything else. You couldn't own gold. It was illegal. So that seems pretty ridiculous today, but it was the state of things back then. So he decided to do something about it, and he launched Gold Newsletter as really a tool in lobbying for and advocating for the return of the right of gold ownership. So Jim kind of led an organization called the National Committee to Legalize Gold, and used Gold Newsletter as a part of that back then, and was successful. And in early 70s or in 1974, they were signed the legislation legalizing gold, and he decided to have a conference to basically educate American investors on how to buy gold. And that was the start of what became the New Orleans Investment Conference some 38 years later. I'm sorry, 48 years later. And this will be our 48th annual event this year. Over the years, we've had just, as you mentioned, like a Hall of Fame of speakers at the event. We've had Margaret Thatcher, we had Ayn Rand for her final public appearance before she passed, Milton Friedman a number of times, Alan Greenspan a number of times. The list, as you said, goes on and on and on of luminaries that have spoken at our event. And although we cover all of the markets, we are known for, kind of starting off with a geopolitical angle on the markets, and then economic angle, and then drilling down into all of the asset classes. And though we cover really all of the asset classes, we are known still for being kind of the preeminent conference for covering precious metals, monetary issues, the mining stocks, et cetera. That's been a consistent theme over the decades. And, we're known as the granddaddy of investment conferences, and one of the few out there that has this long distinguished history of really focusing on those issues. And as a part of it, personal liberty and free markets. That will always be a big theme of ours. And we have a big, libertarian streak running through the event.
Yeah, there's a strong connection between gold and liberty, as Alan Greenspan himself would know, in that essay that he wrote for Ayn Rand back in 1966.
Yeah, and I actually have had some discussions with Alan Greenspan about that and his history and the situation with the federal debt and everything else. So he is a reformed, an unreformed gold bug now. He's back to his old gold bug ways that he abandoned while he was within the heart of darkness, as it were.
That's incredible. I was just going to add one thing to what you said about Nixon in 1971. So first of all, that pretty little speech of his is on YouTube.
Yeah.
And for anybody who hasn't seen it, man, I recommend, it's only a minute or whatever it is, where he says, I've directed Secretary Connolly to temporarily, and use the word temporarily, suspend, redemption or payment of dollars in gold or other reserve assets, blah, 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 blah. But the net effect is if if you're not buying your things abroad, then that should have no effect on the purchasing power of your dollar.
Yeah.
And that to me is the far greater crime. Breaking into a hotel and stealing a few tapes from his competitors pales in comparison to the monetary crime that should be called the crime of 71.
Yeah, and I have some opinions on that I would love to put, past you, Keith, because of your background and your history and knowledge and views on the subject. But, one of the things I give Nixon credit for a couple of things. I'm a bit kinder than him than a lot of other people. Number one, I think he was correct in calling it temporary. I think it will be reversed, and I think we're in the end game of a process that will probably show it being reversed eventually. That is one of the few options out of it. But when you look at it from Nixon's standpoint, did he really have a lot of options facing, given the fact that de Gaulle was taking all of our gold and the Bank of England was taking all of our gold? If you wanted to keep the gold, you had to stop that. But in my view, he had an option that I think central banks still have today, and that he could have simply devalued the dollar, just basically changed the gold price to a more realistic one. And that would have instantly devalued the dollar. The issue, of course, with that is it's all up front and above the table. And everybody sees that you're recognizing that you failed in preserving the value of the dollar. And so, everybody sees it. Whereas this insidious, below the table, ongoing process of monetary inflation and dollar depreciation is something that happens in the background. And, you can always blame on the guy before you and the guy after you. But when you devalue, it's transparent. You screwed up. But that was an option he could have maintained. And that going forward is the reason why I think you can go back to a tie to gold at least a partial coverage for the dollar and or other fiat currencies. The issue is that going forward, when you need to devalue, it's obvious, you are devaluing.
It's interesting. You mentioned Nixon could have devalued. The story goes that the leading Keynesian at the time, Samuelson, had prepared it was an article, an op-ed or whatever for the Washington Post, with the headline, Nixon devalues, and they were only just waiting for the number to plug in and run the story. And,
really? I didn't know that.
And it was actually Milton Friedman whispering in Nixon's ear to just default entirely, go off the gold standard.
Yeah.
One of those perversities where the left was just, okay, we'll just make it $70 an ounce or whatever they thought the right number would be. And the right saying, or the alleged right saying, no, just completely default, it's fine. Dollars that need to be redeemable in gold at all, just sever the link. Make it so much easier to adjust wages, which are sticky, blah, 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 blah. And of course, that's what Nixon did. I have to assume Nixon didn't really understand the implications of it.
No.
He's a politician, but I have to assume that Milton Friedman did, what should have or would have.
Yeah, and as much as I love Milton Friedman and still love his talent for explaining free market principles, the whole gold issue was a blind spot with him. In fact, we have an archive of virtually all the recordings of presentations going back to 1974 at our conference. And sitting on my desktop right now is a recording of John Exter giving a presentation. And I've only listened to the first half. We've had to go back and have the cassette tape restored because it broke after we listened to the first half of it. And he was jumping into slamming Milton Friedman. And I'm thinking, oh, this is gold. This is gold. There may be only 6 other people out there in the whole world that will appreciate this like I do, but they're going to love this. And so literally we just had it restored. I have the entire recording on my desktop. I have to finish listening to it, and we're going to release it to the public and hopefully be able to go back and get some more. I actually have beyond that, I have another presentation from Milton Friedman that I have to listen to and get released.
That's awesome. Good old Exter.
Yeah, not very many people know him, but those who do really. I
guess most of the serious people in the gold community would, because of Exter's pyramid.
I was about to say, this is the same Exter's liquidity, liquidity pyramid.
The inverted pyramid of,
that's right. Yeah.
Asset liquidity. Yeah.
With gold at the very
at the very bottom.
Very bottom. Right. I was going to say, Friedman. Maybe I'm at risk of giving some offense in saying this, but Friedman, for all of his free market bona fides, there's a quote from him talking about daylight savings time as an analogy to currency, and he basically says, you might think that everybody could just reset their clock twice a year, if they want to or whatever, but how much more efficient it is to have a master clock, and that's an analogy to employers and employees could renegotiate wages in a free market, but how much more efficient it is if wages are too high and too sticky to just devalue the currency, and that solves the problem. And when I first read that, I just wanted to yell at the screen that, wait a minute, what about all the savers who are not employees who need their wages adjusted? You're just adjusting their life savings down by whatever percentage you think wages need to be adjusted down. Do you not think that that's a pretty significant, side effect? Like you go to the doctor and say, hey, I have a little acne on my face, and he gives you a pill that causes a heart attack, but at least it cures the acne. Is that maybe a little extreme?
Yeah, and it's interesting when you look through history, and God help us, because we're going to be judged at some point too. But you look at these people that are like, you look at Milton Friedman's Free to Choose series on PBS, and beyond the absolute astonishment that PBS would ever air such a thing, or that Milton Friedman would get, the Nobel Prize. He was such an eloquent defender of liberty and free markets, but he's also the guy that started payroll tax deductions, and which he admittedly regretted as the big, mistake of his life. but he also did have that blind spot for gold. So everybody's just, a mix of anachronisms and the like. Greenspan, was one of the most radical libertarians in gold bugs in the 60s. And even when he was chairman of the Federal Reserve, he happened to meet Jim Blanchard one time at a Cato dedication of their new building. And he told Jim, says, I really think that's the best stuff I ever wrote. And then, of course, once he got out of power, as it were, and came to our conference, and he's talking like the most diehard radical libertarian gold bug again. So, who knows if we were in their same positions what we would do. But, I guess I'm a little more lenient and tolerant of people, in the public life for that many decades, that everybody's at least granted a few mulligans. But the payroll tax deduction, that was a big one.
I'm a big, not only fan of Lord of the Rings, but I love to use the analogy of the One Ring. And for me, that's the analogy for Greenspan. Like he got it when you read that 1966 essay. It's like, there it is, almost the definitive statement. Why they don't want you to have gold. Of course, in 1966, it was still illegal for another 9 years. And what they can do, because they've trapped you in their dollar, because they've made it illegal to own gold. He totally gets it, and he makes a very eloquent, a very clear case. Then he goes into the Fed. As I understood it, he told Ayn Rand, because they were still friendly at that time, that he's going to go in and try to end it or fix it from within. And then somewhere along the way, he's tempted by the One Ring, which is power. And he had a good run where, every time he would appear in public, everyone called him the maestro, and listened with bated breath. What is he going to say? And that all gets to be pretty heady stuff. Stroking the ego.
By the power in the system. He pretty much admitted to that when he spoke at our conference in 2016, that he was trying to fix it from within. And it was the job, and I guess that's one way to look at it. It is the job of the Federal Reserve Chairman to finance the spending of the United States government. And so if he were not to do that, if he were just to say, no, I'm not going to do that, then somebody else would be in the job next week. And that other person would not at least cling to the remnants of, the free market or libertarian ideals that Greenspan did. But, if you're not going to put them to work, then what use is holding those ideals buried, within you, if they're not going to influence how you're acting?
I've had people suggest to me, Keith, you should be they should make you the chairman of the Fed, and you'd shut it down. And I was like, no. If you really wanted to shut down the Fed, make me the Secretary of the Treasury, and from that role, I could potentially, assuming that was a mandate, do something about the Fed. But from inside the Fed, all you can do is follow the mandate, and if you don't follow the mandate, as you say, they'll just put the next guy in. Who would.
The most important thing you could do if they gave you the job of Federal Reserve Chairman is to resign. That would be about it.
So getting back to Ayn Rand, and then I want to stop bashing Greenspan, but I can't resist one more good whack. Was there's late in the book they offered John Galt, and Dickson, you should probably close your ears if you're still right now at this very moment. They offered John Galt the job of economic dictator. And he refuses, and they're like, no, you have to take the job, tell us what to do, economic dictator. He's like, okay, shut it all down. And like, no, you can't be serious. He's like, I am serious. And that's the world. So as I understand it, through the objectivist community, Jim Blanchard offered Ayn Rand, when she was the speaker, was that 1981 or 1980?
1980.
She died in
81. It was 81.
She died in 81, and I don't know how close to her death that event was.
Weeks.
Weeks. Wow. That they offered her the choice of either first-class airfare or a first-class, train like her own private cabin on a train.
Yeah.
And obviously there's a symbolic significance to railroads, given theme of Atlas Shrugged.
Yeah.
And also I imagine if you're elderly and frail, being in a first class train cabin is probably a lot less physical stress than flying in airports. And
no, you're going to love this story then, or hate it. Actually, Jim was a tremendous Ayn Rand fan, and after his accident when he was a teenager that crippled him, put him in a wheelchair for the rest of his life, it was somebody tossing a copy of the book Anthem on his lap that turned around his life. And so he really wanted Ayn Rand to speak, and had tried to get her for a number of years, couldn't convince her. And he wrote this heartfelt letter talking about his experience, how he named his son Anthem, and then offered a private rail car. One of the longtime conference attendees actually had their own private rail car, luxurious rail car. And he offered that to her as the mode of travel. And she loved trains. So just the romance of being coming down to New Orleans on a train convinced her to accept the offer, and she did. And she spoke, and unfortunately, she didn't really understand the conference that well. She thought it was a conference of business people and not really investors. So she did a speech on the obligations of business people to promote free markets and everything else. But anyway, it worked, and it was Ayn Rand, so rousing applause and everything else. And she took the train back, but it was, mid-fall or whatever. It was a bit cold outside, and the window in her Pullman car was open on the way up, and we kind of speculate that that's how she caught a cold, of which she died from a month later.
oh, no.
So we actually, speaking at the conference, may have actually killed Ayn Rand, in a tragic turn of events. But she was very old at the time.
Yeah, no, I didn't know that. I think she had cancer too. So I'm not sure that there's any one single cause of death.
Yeah.
At that point. So fast forward, tell us a little bit about what was that the pinnacle of the conference? Did it continue to grow? You got hired in '85. How did you end up coming to buy it from Blanchard?
Yeah, I started off as a junior copywriter in '85, and got to become fast friends with Jim. And but even I was 25 years old at the time, and Jim and I on a company trip to Washington to lobby for this and that. It was a bunch of company executives, and I got invited along. And along that trip, we got to talking and realized that we were both big fans of Robert Heinlein's science fiction work. And so it was mutual bonding right away. And I had, because of that, developed a lot of libertarian beliefs, but didn't know I was libertarian. I'd never really been exposed that much to whatever kind of structure there is in that philosophy. And so getting to know Jim and everybody involved in the conference and his business and the newsletter kind of exposed me to that in a much more formalized way. Jim sold his coin company to a hedge fund that was spun out of General Electric in 1988. And they ran the company down. I was by then the head copywriter for the coin company. And they ran the company down into the ground very quickly. You'll appreciate this. I remember one time I heard a couple of suits walking in the hall, and they were wondering what the melt value of a half dime was. And I'm like, these guys are total idiots. And so it was terrible that it went from $115 million a year in revenue to almost closing the doors. So Jim bought the company back on a distress level from the hedge fund in 1990, then sold it back to the people who were managing it. And then took the newsletters and the conference into a new company that he started with me. And that was it. We were the two lone employees really at the time. And we started, so I ran his business for the next 9 years, and he passed away in 1999. And early 2000s, I bought the remaining interest that I didn't already own from the estate. So I've been in it since '85, and sometimes I'm feeling my age, Keith, but especially when you look at what's happening in the gold market these days. You
I was
know,
gonna say, you look young.
yeah, well, I started young, but you know, there's some mornings where I wake up, my bones creaking. I don't feel that young.
So
hear you.
I have to interject because you said there was a science fiction writer you mentioned, Robert
Heinlein.
Heinlein.
Yeah.
So I'm a big sci-fi fan. I've never heard of that name. Like, give me the quick.
Robert Heinlein?
I mean, maybe I shouldn't say I'm a fan. I'm into sci-fi right now.
No, not haven't heard
I'm
it
a
yet.
sci-fi noob, but I'm reading everything I can in the genre.
He was known as the dean of science fiction. He wrote Stranger in a Strange Land, The Moon is a Harsh Mistress, the Notebooks of Lazarus Long. Actually, that wasn't the title, but Lazarus Long was a character in a number of books. Yeah, I can send you a list, or just look up, Google a list, but definitely. I grew up reading his juvenile series, and, you know, still as a juvenile, got into some of his adult series, which were really eye-opening for a kid. When you get into A Stranger in a Strange Land, but read The Moon is a Harsh Mistress first, and then Stranger in a Strange Land, and that'll give you a great introduction.
And you said he kind of gets into free market principles just in his like world building and that sort of thing.
He started off writing for the pulps in the 1930s, and was actually started off as a liberal, kind of made the, not a classical liberal, but made that transition that so many people do over the years, and ended up being very much a libertarian. In fact, one of the books, Starship Troopers, they made the movie out of it. The movie was not really, it was only vaguely related to the book.
Sure.
But it was made in, it was a good movie, I thought, but it wasn't the book. It was more of a campy kind of a take on it. But that's another one that actually is a bit more neoconservative, I would say, than a lot of his other works.
Yeah, because he has this idea that the only military service really gives you the full rights of citizenship.
Yeah. Which actually, I don't know if it was actually military service or some kind of public service. In other words, you had really no cost to you other than your time or whatever. You had to want the right to vote to earn it. And I don't know that that's actually a bad thing.
Certainly
Yeah.
an unpopular opinion today, but if you go back to the
It would
founding,
be. I mean, it's not going to get.
if you go back to the
anybody
founding of the United States, though, there were.
Let's say you graduate high school, and if you want the right to vote, you go into some kind of, spend a year in some kind of public service, like, you know,
Right.
Peace Corps, or, you know, Civil Conservation Corps, or something like that for a year, but you earn the right to actually vote if you really care about voting. I mean, you look at a lot of these ads, you know, that are out there, especially during presidential elections, you know, trying to convince people to vote. I don't want anybody to vote that had to be convinced to vote. You know, I want people who have actual responsibility, or feel an actual responsibility to vote and know the issues. I want them voting. I don't want anybody to, you know, have to twist their arm to vote. I don't want them out there. Please don't go vote.
Yeah, we'll vote for food. I can see
Yeah.
someone holding the sign right now.
Well, I appreciate you taking that detour. I'd love to go back to James Blanchard, though, because, you know, I'm a bit on the outside looking in, but James Blanchard seems to be this kind of unsung hero in the gold community. Maybe if you're kind of deep into the gold community and industry, you know him. but if you're not, you may have never heard of him. But it seems like he was quite a, important figure in the history of gold, at least in the United States. Can you give kind of like an overview of I know you started to, but maybe just give the audience an overview of who he was, what his contributions were to gold and the gold community.
He may be the most important figure in modern history as it relates to gold. He wasn't the only person who was advocating and lobbying for the return of the right of gold ownership, but he was one of the key people, if not the most important person, and certainly the one that did, the most on the ground. He went around the country having press conferences that were announced to the Treasury Department at every stop, and he had a 2-ounce bar of gold that he would brandish at every press conference and say, "Why is this illegal to own? I own this. This is illegal. Please come arrest me." And they never took the bait and never did arrest him, unfortunately. But he would, he led protests on the Treasury steps in Washington. He famously hired a biplane to tow a banner that said "Legalize Gold" over Nixon's second inauguration, which today they would throw you in Guantanamo Bay for that, but back then, they just sorted a few.
Right, and anybody who posted about it on Facebook would put this little sticker on there that says, PolitiFact determines that this is bullshit, and for the real gold story, click here.
Yeah. He was very important for that, for getting gold legalized. And I think also very important for starting the New Orleans Investment Conference, which is, you can ask anybody that's been there, it's a really important thing in their lives and in the history of investing and the future, I believe. But Jim was the most charismatic individual I ever met. He was just an amazing guy. He would roll into any room and dominate it. Not that he would dominate it in terms of wanting to dominate in terms of his personality, but everybody knew he was there. His energy level, his enthusiasm were just unbounded. I mean, the guy went everywhere from the North to the South Pole, all around the world, behind the iron and bamboo curtains, in a wheelchair. And I hauled him through some of those areas myself, and a number of us other people who are close friends of his helped do that. But he was just really just such an inspirational person. He could convince you to run through a brick wall. And so many times I would get in a cab with him, and there'd be an immigrant cab driver, and he would ask them about where they were from, how were the politics and everything else. When we would get out of the cab, and the cab driver would be wearing Jim's tie around his head, like, and yelling, "Go freedom, go freedom, go America," and all this stuff. And it was just amazing, his impact on people. Incredible individual. And, very sad that he is gone. And what we do every day here is just try to burnish and extend that legacy.
Right.
That's great. So yeah, maybe now's a good time to transition into, I guess, going through what you would describe as the highlight reel for the New Orleans Investment Conference. We mentioned you've had some incredible speakers, and you've already named some of those, but I'm curious, as someone who's been doing it for as long as you have, are there any particularly memorable conferences that come to mind? Any ones that stand out?
That's easy for me. I was very fortunate to meet a lot of these people, a lot of these, giants of recent history, at least. But the one that really stands out for me is Margaret Thatcher. She was the deal. We had a lot of these people, and I won't go into names, but a lot of the celebrities du jour, either, military generals, senators, past presidents, secretaries of state and all that, but they would be basically empty suits. They got their check, gave their rousing speech, and left. and didn't really project their personality or even talk to anybody who was, below their stature. But Margaret Thatcher was definitely the real deal. We were very fortunate to have a lunch that Jim had organized. And my wife and I were at one side of Margaret Thatcher near the head of the table. She was at the head of the table, and Jim and his wife were opposite us. And then we had a bunch of luminaries down, big name speakers, who were also at the table, probably another 8 or so, and some really big names. And Margaret Thatcher realized at the time that my wife and I's 2 children were the same ages as her grandchildren. So she started talking to us about young children and her grandkids and our kids. And for about 20 minutes, she's just talking to my wife and I, and, to the, ignoring anybody else at the table, all these other luminaries. Well, eventually, Jim Rogers, further down the table, at the other end of the table, has had enough of this. So Jim pipes up and it says, "Lady Thatcher, why didn't you join the Euro?" And so Lady Thatcher turns from talking to us, slowly looks down and gives Jim basically her pat answer, political answer, and then she turns back to us to continue talking about her grandkids. Well, Jim's a pugnacious guy, as you probably know. He ain't going to take that for nothing. So Jim says something like, "Well, we've all heard that. What's your real view?" And that she slowly turns and looks at him, and nobody at the table that was there can remember what she said, but she rhetorically sliced him to ribbons without raising her voice, just tore him to pieces, stopped, then turned right back to us and continued in mid-sentence talking about her grandkids. And everybody was just shocked. And I've never seen Jim Rogers speechless before or since. It was just absolutely amazing, but that's what she was. And she was just so personable. And you think about her, and she's depicted as this iron lady, but she was just so gracious. And one of those people who was willing to talk to anyone. It didn't matter their place or station in life. She talked to everybody as if they were an equal.
That's amazing. And of course, she's famous for that quote where she said, having power is like being a lady. If you have to say it, you're not.
You're not one.
Yeah. There you saw both power and she was a lady, first class. That's cool.
She was amazing. She really was very eloquent, very personable, and really stands out, among the crowd.
What was her talk? Like what did she present on at the conference?
Trying to think. It's actually online. People can go to our website and get it. But she had a few little quips in it. The most important things about it, our talk, were when she was talking about Reagan and had a few little quips like, "Yeah, I was telling Ronnie, don't go wobbly," and this sort of thing. And that was the best part of it. It was whatever the issues of the day were. I forget. And of course, a few reminiscences about the Falklands and all of that.
I remember the Falklands as a 9th grader. It just seemed bizarre that this little third world country, Argentina, would be messing with the UK. But as a 9th grader, you don't really get it.
Yeah, and it was a time of the decline of the British Empire, and it was the British Empire primarily because of Thatcher's influence being rejuvenated, as the denationalization of key industries and everything. And it was their last great swipe at being a world power once again. And they were able to do it. But there was a lot of determination. I mean, it was her iron will that really drove that.
Yeah, you kind of look at the situation there today and say, is that somebody like that even possible? Would they ever rise to any degree of prominence, given the political situation there or here, for that matter? Will we ever see another Reagan here?
Yeah, and I don't know if we'll ever see another Reagan or Thatcher or somebody that has that power of personality in the right way. I mean, we see some of these people like Trump that have a power of personality, and I think it's possible to get people behind you, but it's also scary when somebody has that ability, you know, and they don't use that power of persuasion for good. You know, and politics is so screwed up. And even in, you know, one of the key things that I'm talking about in investments, if you look at some of the people of that era, if you look at Paul Volcker, you know, is Jay Powell a Paul Volcker? He's certainly trying to be right now. But my big argument now is that it's a moot point. You know, it's irrelevant because he doesn't have the tools that Volcker has. So he's, you know, at some point he's going to have to take a knee in the fight against inflation because there's nothing he can do with the debt this high.
You know, it reminds me of that Elizabeth Holmes, who was the CEO of Theranos, company that was committing fraud. She was so consciously trying to be Steve Jobs with the black turtleneck and all that. I'm trying to remember, who was it that some reporter or somebody said, "Are you the next so-and-so?" And he was kind of surprised at the question. He turned around and said, "No, I'm the first," whatever his name was.
Yeah.
Like, if you're really sitting here thinking, "I'm going to be the next Paul Volcker," Paul Volcker wasn't sitting there thinking he's going to be the next Secretary Connolly or Morgenthau or whoever. He was
trying to be Paul Volcker.
He was, you know, he was trying to do what he thought was the right thing, and you know, where you know, that has to be sorted out later, you know, kind of thing. So I was going to say, I think one of the things that everybody's going to be keen to hear about is, what do you think are the key or the top either investment themes of where we're at right now, or what do you think would be the top investment themes coming up in the New Orleans conference next month?
Yeah, I think there's only one theme, and it's the only thing that drives the markets. It's the only thing that's been driving the market, really, the markets since 2008, and that's Federal Reserve policy. And everything is dependent on that. You know, the price of gold is set every day in New York by Wall Street traders and algorithms, and they have a very simple formula. It's anything that points toward a more hawkish Fed is bad for stocks, and it's bad for gold. It's bad for anything that's been driven by this central bank liquidity, as it has been for the last dozen years or so, and to a lesser degree even before that. So that's why you have a you know, red hot inflation numbers come out and gold gets sold off along with everything else, because that means the Fed is going to raise rates, and they never take it to the next logical step. But I think, you know, this is my personal view, that in the next really few weeks, if not few months, there's going to be a big reckoning coming up, because the debt's so large that the Fed is not going to be able to continue hiking rates. And that's going to be a really big issue. It's already, the federal interest payments are already at $600 billion on an annual basis. And that's the highest level in history. And the trend line is pointed straight for the sky. And those are quarterly numbers. They compiled quarterly, reported quarterly. So we're looking at the second quarter for those numbers. We don't have the third quarter yet, which will include the effects of all of the Fed's most aggressive rate hikes. And so even small rate hikes are tremendously impactful to the bottom line interest costs, debt service costs, because the debt is so high. The debt right now is 4 times larger than it was in 2008, over 4 times larger. And so, and we're increasing rates right now at a vast multiple, 4 or 5 times the rate that we were in 2015. So the impact is going to be, you know, just tremendous. It's going to be like a steam train hitting you in a tunnel. There's going to be nowhere to hide, and it's coming up very soon that we're going to get those numbers reported. I think that's going to be a political and fiscal barrier to the Fed doing much more on the interest rate front. And the end result of that is we're going to have high inflation, and the Fed essentially being proven powerless to do anything about it. That's an environment that's not bullish, unlike all the previous environments. It's not bullish for equities, it's not bullish for bonds, but it is bullish for precious metals. And if you have even a small fraction of the investing public out there, of those investable funds, realizing that and being allocated into precious metals, the impact, because the metals are such a small market, the impact, if that happens, the impact would be stupendous. But
I just tweeted earlier today, I said, when will the 3-month to 10-year treasury spread invert?
Yeah.
And I made it as a poll just to be kind of funny and perverse about it. And I said, tomorrow, choice A, soon enough, choice B. Choice C was when the Fed did something, I don't remember, I don't tweet anymore. The choice D was never. And we'll see what, because it's pretty close. It's, I think, 14 basis points right now.
You said tomorrow, soon enough, at the next Fed hike, or never.
That's right. Thanks for finding that.
See what it comes up as.
So what's winning right now?
Right now, soon enough at 41%. Never. Tomorrow is in trailing, and fourth place, and never is at 17%.
It's pretty close, and of course the inversion is another. I mean, there's the interest expense to the government. Of course, there's also the interest expense to all the zombies and companies that weren't quite so close to. We're close to being zombies, but not quite zombies. As the interest expense goes up, then all these companies are dragged in to where they can't even afford their interest payments.
Which is going to deepen a recession, which is going to reduce tax revenues.
Right, so the deficit increases. But the other thing is the inversion, because the banks are all in the game of borrow short to lend long. So now if they're borrowing at a higher rate and lending at a lower rate, then they're getting crushed.
Right.
And so if you wanted to have a healthy economy, impairing that. So actually the banks get crushed two ways. One is their cash flow is impaired because their cost of funding goes up immediately. The long-term assets they own, aren't changing very much, except they're losing the price of the asset is going down. So it's actually hitting them in the balance sheet as well as the income statement.
Yeah.
And if you want a healthy economy, probably not the best way to go about that is to cause the banks to be impaired. And how long does the Fed continue to play at this before they cry uncle is anybody's guess.
There's really three legs to this, that three factors that could convince the Fed to at least stop. And I think that would be sufficiently bullish for the precious metals, much less pivot, but at least stop. And one is the impact on the economy. One is the impact on the financial markets. Wall Street basically telling them to stop. And of course, Powell's been able to ignore that so far. And the other one is just the cost of servicing the debt, soaring to the level where, already it's about to dwarf defense spending. And then you have the rest of the entitlements. It's going to hit, I think, $1 trillion a year, which was kind of a magical big number that I think will have some political sway out there. Is going to hit that pretty soon. But think about this: if we're paying $1 trillion, if we're running $1 trillion deficit right now, and you add on to that $1 trillion in debt service expense, so now you're running close to, a $2 trillion deficit without increasing spending. You're just paying that added interest costs on the federal debt. How are you going to pay that in a deficit situation? You're going to borrow more. So you're going to borrow more to pay the interest on the debt you already have. So then you're going to create more debt that you have to pay interest on. So what are you going to do? You're going to borrow more. So it's a classic debt spiral.
The debt spiral, exactly. That's it.
That would crater any kind of a private enterprise almost immediately. But obviously sovereigns don't play by the same rules, and especially a sovereign that has the world's reserve currency doesn't play by the rules. So it can extend this process a lot longer. And so that's one argument. But the fact is, this is a 60-year-old process. since the guns and butter of the 1960s. And if you look at it going back that far, you see that the Fed has lowered interest rates every instance of there's been any kind of a economic hiccup since the 1970s, and it's never been able to raise them again. So you've always gone progressively lower until you reach zero. And you have to bring out all these other tools, quantitative easing, all of the acronyms like TARP and everything else. So, things are happening more quickly now. Like when the water gets drained out of a tub and it's going around the drain, it goes much more quickly. I think we're in the end game of this multi-decadal process of the basically the long, slow default in the dollar and the debt. And we're in that end game, whether it's going to be, another 10 or 20 years, whether it's going to be this cycle that does it or the next and the next, it's going to play out much more quickly now, I think. That's why I think this is a really a crucial time.
So that's the reason for buying gold right there. Forget
Yeah.
the bet on its price. Is the price going to go up next week? Well, maybe. But if you own gold, you don't own the Fed's liability.
Yeah, and Keith, that there's a lot of smart people out there on the internet, on financial Twitter and the like, and we get in arguments all the time on a daily basis with a lot of them. A lot of people out there, really smart, great arguments, plotting the exact path of events going forward and what's going to happen. And as far as I'm concerned, I'm not smart enough to figure all that out. And frankly, I don't think anybody is. There's just too many variables. But the one thing we can be confident in is you're going to want to own gold and silver going into what's ahead.
I was going to say, I always like to trot out the Yogi Berra joke, where he says predictions are hard, especially about the future.
Yeah, exactly.
What's the exact timing? What's the exact order in which, this bank is going to do this and then that's going to fail? And then, very hard to say, but we can see the general shape of it, which is, so I was at the Cato Institute Monetary Conference. This would have been maybe 2014.
Mm-hmm.
And it struck me that speaker after speaker after speaker, so they had some current Fed governors, they had some ex-Fed governors or other high Fed officials. They had John Taylor of the Taylor Rule of Stanford. They had all these people that one after the other, they all have the same monetarist playbook, which is, purporting to say what the right interest rate that the Fed should impose. Largely Taylor Rule at that time.
Mm-hmm.
And, speaker after speaker was puzzled, and they said, I don't really know why Chairman Bernanke hasn't, raised rates. And at that time, I was still kind of working on the ideas for what became my theory of interest in prices. And one of the ideas I was kind of stuck on was this analogy of a black hole, and you're in the spaceship, and I'm assuming you have a big enough rocket on the back, you can zip in and out and do all these things as long as you don't get inside the event horizon.
Yeah.
Which is this radius that's way outside. I mean, the black hole is this little point. The event horizon is something like, half a light year. It's huge. It's a lot bigger than most people would think. As long as you don't get inside that, you're fine. You can zing it out. But if you're falling, and you get inside the event horizon, then you're going to the singularity extent, you're going to zero.
Mm-hmm.
And then it clicked for me, because I was thinking, like, the interest rate keeps going down. And here's an analogy that if you grew up in New Orleans, may not necessarily appreciate this, but I grew up in upstate New York, where we had plenty of snow on the ground and plenty of hills. And, every young boy of 6 or 8 years old has to try this at least once. You take the snowball, because you've seen it in cartoons, movies, and then you start pushing it. Mm-hmm. And then if the snow is kind of that spring snow, which is kind of sticky and wet, it will accumulate on the snowball. And then you're pushing it down the hill. And, at first it's kind of frictional and you're tearing up all the snow from sort of dead grass under it. And then you get to that point, usually the hill's getting steeper at that point, and the snowball is picking up mass exponentially. There's a point at which
Stop it.
I call it the oh shit moment.
Yeah.
That every 8-year-old boy has to have, myself included. And at that point, the things, I mean, you can kind of run with it for quite a while and hover your hands over it and pretend, but it's gotten away from you. And the only two things are going to govern its fate, which is gravity and the house or the car or whatever's at the bottom of the hill. And the thing I was struggling with was that is that's an analogy for the interest rate been falling since 1981. Is this the analogy for it? And then when it was like 3 or 4 speakers in a row, 4 or 5 speakers, it was a lot. We're all just puzzled why, Bernanke has the same playbook. Why hasn't he raised rates? It was like, ding, because he can't, because he's trapped. And this is the direction of the chute. It goes down, it does not go up. Up was 1947 to 1981. It cannot, you can't go back and be Volcker at this point for so many reasons, and that's one of them. And that Bernanke probably realized he couldn't, but didn't necessarily trust even these relatively high officials. He didn't include them in his council. They're clearly puzzled. I mean, I don't think they were lying. I don't think they were politicians in that instant. I think they were just genuinely, why isn't he doing it? I don't know. And they had their charts, the Taylor rule, what the interest rate should have been. And 6 months ago, they should have raised by 50 bips or whatever they're saying. And, the question that I have is, okay, they tried to hike rates in 2005. And that caused, or I shouldn't say caused, I think it was baked in the cake, but precipitated the crisis of 08.
Mm-hmm.
Well, we've now gone on this, aggressive and getting aggressiver rate hiking binge. What is going to come out of this? And how bad will it be? And, how many backroom deals will there be where they take, what was his name? The CEO of Bank of America at the time, Hank Paulson, summons him to Washington, D.C. Friday evening. Mm-hmm. And so Bank of America was in the process of acquiring Merrill Lynch in the fall of 2008. And discovered there was a material adverse change. And I said, okay, the deal was off. Of course, there was a material adverse change. Everything was materially adversely changing during that couple of month period. And so Hank Paulson summons him to a basement meeting in Washington, D.C. Friday evening. And by Sunday, and I was joking, he made him an offer he couldn't refuse.
Yeah.
And by Sunday morning, that guy, what was his name? CEO of Bank of America was on TV.
Tip of my tongue, I can't remember.
Was on on the air on Sunday saying the deal's back on. And Hank Paulson's treasury had twisted his arm, and nobody's going to know what he's offered.
Ken Lewis.
Yeah, that's right. How many stories are going to come out of this one? My gut feeling, I'm interested in your take on this too, is that can still has a good number of kicks left in it. That yes, we're in the end game, but the end game has longer to play out. It's not tomorrow or next week or next month.
My view is yeah, I could. I've gotten in heated discussions with Peter Schiff about this, who thinks the next one's the big one, the death of the dollar. And I just don't know. They successfully kicked the can, but what hits me is that things are moving much more quickly right now, which they do, as these processes play out. You look at 2008, and you look at what they did in terms of quantitative easing and lowering interest rates, and they took 4 to 5 years to do that. In the pandemic, in March of 2020, they did all of that they took 4 to 5 years to do. They did it in 4 to 5 days. In some cases, 4 to 5 hours. So everything happened much more quickly. And not only that, they did much more than they did before. So, the way I look at it very generally is the next crisis, because the markets aren't addicted to easy money, they're addicted to ever easier money. Because the patient has developed such a tolerance to the drug, they're going to have to do that much more of a dosage. So whatever they did, in March of 2020, they're going to have to do many more times the next time. So at what point and this is not just the dollar, this is all fiat currencies. At what point do these fiat currencies lose credibility? Because the markets will look ahead and say, not only are we having these crises much more frequently, but we're doing god-awful amounts more in each crisis. So this is having a real-world effect on what is that currency, what is that unit of currency worth when it is going to be multiplied by the next crisis. That's going to come again much more quickly. So people at some point will look at not so much the value of that paper, which is being eroded, and they know it's going to be eroded. You know, gold rises. Gold is not an inflation hedge. It doesn't track the CPI, doesn't attract prices in any way. And you can tell that by obviously looking at the chart. But if you look at that chart, you see these jagged jumps every now and then where it really rises. And what that is, it's a barometer of people's freaking out. It's a freak out barometer, measure, or hedge. When people really start to worry about the value of their currency next week, what is that going to be worth? Then that's when people go into gold. So it makes up for that lost time. It kind of bebops along, doesn't do much. Then when things get really bad, everybody rushes into it, and it even overshoots equilibrium. So I think we're coming into a point where we're at the end of this multi-decadal cycle of the rapid depreciation and loss of credibility in fiat currencies because of this deficit spending and ever easier money policies. And at the end of that cycle, we're going to get to something that will very much resemble the 1970s when people were really looking to gold and silver as that last bastion of value. And I think that's probably going to be involved in the end game. You know, what the Great Reset is going to be. It would be very easy to, as you know, a number of people have shown, to just back the dollar 20% level. That the current level of M2, you know, that would imply a $10,000 gold price. That's not out of the realm of possibility. And interestingly, it's also, you know, what else are you going to value against? You know, if you attach the dollar to any other commodity or whatever, because there are so many dollars out there, it would entail really, you know, revaluing that other commodity. Gold is the only commodity out there that you could change its price from $1,700 to $10,000 tomorrow, and it would not affect any industry. Wouldn't affect the end prices of anything except the jewelry sitting on the shelf right now. And that's
a very underappreciated historical point. That is, when people turn to hoarding money, good thing that money isn't edible, because if food were money, then the need to hoard money would mean that the marginal consumer is going to starve to death.
Yeah.
Whereas, you know, if that happens to money, that doesn't change, you know, the availability of food, for example. I'd love to continue that conversation, maybe face to face in New Orleans, or maybe we'll get you back on the show.
Yeah, would love to. Anytime.
But we gotta wrap it here because, believe it or not, we've gone over an hour.
We could go on forever, Keith.
Time flies when you're having fun, and this has been an awesome conversation. Thank you so much for coming on. I look forward to seeing you face to face next month.
I will be there. You know that. I would just encourage all of our listeners to go to the link, which I'm sure you will put up, to look at our list of speakers, because it really is just an incredible list of speakers that we have this year. And of course, the issues they'll be discussing have never been more important.
That is for sure.
Absolutely. Yeah, we'll provide links and resources in the show notes. Want to echo Keith's thanks. Thank you so much, Brien. This was great.
Wonderful to be here. Thanks, guys.
This episode was brought to you by Monetary Metals. Monetary Metals is a different kind of gold company. Others buy and sell gold. Monetary Metals operates the Gold Yield Marketplace, a platform of products that offer a yield on gold paid in gold to investors and institutions, and are gold financing simplified, reliable financing denominated in gold with a built-in hedge for gold-using and gold-producing businesses. To learn more, visit www.monetary-metals.com. See you next time.